A nephew inherited a 1.35 million farm and it cost him 180 grand. I came across the case while preparing for a consult. The nephew had inherited 240 acres from his uncle, 170 acres of farmland and 70 acres of forestry. His accountant filed a CAT return and claimed Favourite Nephew Relief, trying to access the higher 325 grand tax-free threshold that normally only applies to a child. The nephew said he'd been working on the land for 15 hours a week, walking it, checking fences, looking after sheep, and so on. Revenue denied the claim and the relief was withdrawn, costing him 180 grand. But why did they deny the claim? Revenue asked for supporting evidence, a herd number, tag records, stock census, anything from the Department of Agriculture that could back the farming activity. But at the time of the inheritance, there were no sheep, no stock, and no sales. Without data from the Department of Agriculture or any other records, there was no evidence to support the claim, and no way to fix this problem later when Revenue came calling. So how did Revenue frame it? Well, they said, without a business being carried on, the nephew's hours didn't count. If he was on the land, he was just taking walks around empty fields. There was no business, nothing to be working on. Don't be naive when claiming agricultural relief. Don't allow Revenue to set the narrative when claiming favourite nephew or niece relief. For a consultation on how to properly structure land transfers, visit the link in my bio or go to taxunwrapped.ie.